Okay, imagine this. You're trying to climb a mountain, a financial one. Maybe you're just starting out and need that first foothold. Or maybe you've slipped and you're looking for a way back up. For so many people, that climb is all about building or rebuilding credit. It can feel pretty overwhelming, right? Confusing, even. How do you even start?
Well, today we're going to take a really close look at one specific tool that often comes up, the Mission Lane credit card. It gets talked about a lot as a kind of gateway, for people trying to get their credit established or back on track. Our goal here is to figure out if this card is actually the right tool for you.
Yeah, it's interesting, isn't it, how something that seems simple, like a credit card, can actually have, well, pretty big consequences down the line. So what we want to do for you today is cut through the noise, get you a really clear picture of what the Mission Lane card really offers, and maybe more importantly, where you need to look closely. Be cautious. The idea is you walk away feeling confident about whether it fits or doesn't fit your situation. It's exactly. Think of this as getting you up to speed fast. We'll break down the pros and cons, the details of the Mission Lane card, so you can see if it actually lines up with your goals for building credit without getting lost in all the jargon. All right, let's start with the positives. Why do people even consider this card in the first place? Especially if you're just starting out or need that fresh start. Some features do look pretty appealing on the surface.
They do. And probably the biggest one, a major hurdle for many folks trying to build credit, especially if they've had issues before, is needing a security deposit for a secured card. What's often maybe not fully appreciated is that the Mission Lane card avoids that completely. It does not require an upfront security deposit.
And that's huge for accessibility, isn't it? Because if you're already stretched thin or just getting going, finding, a few $100 for a deposit, that can be a non-starter.
Exactly.
So this removes a pretty big barrier right away.
Yeah.
It lets more people actually start that credit building process. You can build trust without needing that initial cash.
Precisely. It opens the door. But once you're through the door, the real work starts. And that's where credit reporting comes in. It's pretty comprehensive.
Right. And this is, I think, a really key strategic point if you're serious about building credit. The Mission Lane card reports your payment history to all three major credit bureaus, Experian, Equifax, and TransUnion. That's not just a small detail. It can actually speed up your progress quite a bit.
It really can. Think of the bureaus like three different scorekeepers watching your financial game. Lenders might only check with one or two, not always all three. So if your good payments only show up with one scorekeeper, well, a lender pulling from a different one might miss it completely. Mission Lane makes sure all three get the memo, basically. That your positive history is seen everywhere. It helps build a stronger, more consistent picture of you faster.
That scorekeeper analogy makes it really clear why hitting all three matters. Your effort gets noticed.
Okay, so beyond just getting started, the card also has a way to help your credit grow, right? Through credit limit increases. They mention reviewing accounts maybe after about 7 months of good payments for a potential limit bump.
Yes, and that's another important piece for strategically improving your credit. Getting a higher credit limit can seriously help your credit utilization ratio.
Utilization, right.
Think of your total available credit like a fuel tank. If you're always using almost all of it, even if you pay it off, lenders see you as running close to empty. High risk, maybe?
Okay.
But if your tank is mostly unused, meaning you're only using a small slice of your available credit, you look much more stable, less dependent on borrowing. Keeping that ratio low, the usual advice is under 30%, sends a really strong positive signal. It can boost your score quite nicely. So those limit increases you earn, they give you more room to keep that ratio low, which looks even better. I like that fuel tank way of thinking about it. Makes total sense. It's almost like a built-in reward for managing things well. Gives you more breathing room financially. And to help manage it, they have a mobile app too, right? For tracking spending, checking that utilization, making payments.
Yep, standard app features.
Plus a couple of small perks like some credit education stuff and rental car insurance. So, if your main goal is just building credit, these features seem pretty solid. But, like always, there's usually another side to it. There are trade-offs, aren't there?
Absolutely. And if we step back and look at, smart financial habits overall, it brings up a key question. What are the costs for these credit building benefits? Every financial product has a balance sheet, pros and cons. And understanding the potential downsides of the Mission Lane card is just as vital as knowing its strengths.
Okay, let's tackle one of the big ones right away.
Yeah.
The annual fee. What's the deal there and how should people think about it?
Right. So the Mission Lane card comes with a $39 annual fee. Now, 39 bucks might not sound like a fortune, but it's a direct cost you have to account for year after year.
Compared to other options.
Well, yeah. Compared to some other entry-level cards, like, say, the Pedal One Visa, which targets a similar audience but often has no annual fee, Mission Lane charges this. The way to think about it, really, is you're essentially paying for the access. The access to an unsecured card reporting to all three bureaus without needing that deposit.
Okay.
It's a fee for the opportunity itself, not really for extra perks.
And speaking of perks,
Mm,
or maybe the lack of them, a lot of cards, even beginner ones, offer something back, right? Points, cash back. What about Mission Lane?
Yeah, that's a clear difference here. The Mission Lane card offers absolutely no rewards, no
Mhm.
cash back, no points, nothing. And that's a pretty big consideration if you were hoping to earn a little something back while you build your credit score.
So no points for groceries or gas or anything.
Nope. If you want travel points or cash back, this just isn't the card for that. It reinforces the idea that this is a purely functional tool. Its whole value proposition is tied to that credit reporting accessibility. You're basically trading away potential rewards for those specific credit building features we talked about.
Okay, now for what might be the most critical point and potentially the most expensive if you're not careful, the APR, the interest rate. This number can be, well, a real shocker sometimes. What's the range here and how should you approach it?
This is probably the most crucial financial detail you have to pay attention here. The Mission Lane card has a very high variable APR. It ranges from 26.99% up to 33.99%. That's quite high.
Wow, okay, 34% at the top end.
Exactly. Let's put that in context. Say you carry just a $500 balance at, let's pick 30% APR.
Okay.
You'd be paying an extra $12.50 every month just in interest. Over a year. That's $150, nearly 4 times the annual fee itself. Just in interest on a small balance. Now, the reason these rates are so high, it reflects the risk. Lenders see borrowers building or rebuilding credit as higher risk.
Understandable from their perspective.
Right. High APRs are one way they manage that risk. But what it means for you, the cardholder, is absolutely critical. You must plan to pay off your statement balance in full every single month, period. Carrying a balance on this card gets very expensive very quickly. It can completely wipe out any progress you're making elsewhere. Think of it like this. It's a tool for building, like a hammer, not a cushion for debt.
So that discipline, paying it off every month, it's not just good advice with this card. It sounds like it's practically essential to make it worthwhile. Because, yeah, with an APR that high, any carried balance becomes a much bigger issue fast.
Precisely. And layered on top of that, there's also a late fee, up
Yeah.
to $35. Now, late fees are common, sure. But for someone who might be struggling to make payments on time consistently, these fees can add up really quickly.
Another potential cost pitfall.
Yeah, it creates more financial pressure. I've seen it happen where someone thinks, oh, just one late payment, it's fine. But if you combine that fee with the high APR kicking in on your balance, it can start a nasty little cycle. And ironically, it directly damages the very credit score you got the card to build. So consistent on-time payments aren't just like best practice here. They are fundamental, mandatory almost for this card to work as intended.
Okay, so let's pull all this together then. Weighing the good stuff, the accessibility, the reporting against the cost of the fee, that high APR, no rewards. Who is this card actually for? Who's the ideal user, and how should they really think about using it?
Well, when you put all the pieces together, it becomes pretty clear. The Mission Lane card seems like a really good stepping stone for a very specific kind of person, someone who is actively starting out on their credit journey, or, and this is key, someone recovering from some significant financial bumps in the road. Its main value is definitely that accessibility, no deposit needed, and that really robust credit reporting to all three bureaus. That's foundational if you want to build a strong credit history that lenders will actually see.
Yeah, it really does seem to fill a specific gap in the market. It's for someone who maybe can't get approved for other cards easily, and they need a reliable way, even if it costs a bit, to show they can handle credit responsibly, show everyone in the credit world. But it's worth saying again, while it's strong for the building part, those costs, that annual fee, the super high APR, they demand really careful, disciplined management.
Absolutely.
There are no rewards to kind of soften the blow of those costs. Its usefulness is laser-focused. The card basically says, commit to using me responsibly, pay me off, and I'll help you build credit.
Yeah, connecting it to the bigger picture. This card isn't about getting perks or fancy benefits. It serves a very specific foundational role. You get the most value out of it when you treat it like a temporary tool, a tool to help you reach a better credit score. It's not really meant for carrying debt long term or earning rewards. It really requires you to understand how it works, know the costs, and be absolutely committed to paying it off in full every single month. Think of it as that stepping stone, a means to an end, helping you get to a place where you qualify for better cards, better loan terms down the road.
So we've really dug into the Mission Lane credit card. We've seen its strengths for building credit, no deposit, that powerful three-bureau reporting. And we've balanced that against the really important financial things you need to keep top of mind, like the annual fee and especially that very high APR. It's definitely a tool with a specific job, and knowing its quirks is key to using it right on your financial path.
This whole discussion about the Mission Lane card, it really shines a light on the kind of strategic thinking needed for any financial product. And it raises, I think, an important question for you, the listener, to maybe mull over. Beyond just this credit card, what other tools or maybe even habits could really move the needle on your credit score and your overall financial well-being? And maybe more importantly, how does taking the time to really understand the fine print, the good, the bad, the trade-offs, empower you to pick the right first step for your own unique journey instead of just grabbing the easiest and most advertised option?
Great points to consider. Keep digging, keep learning, and thanks for joining us on this deep dive.